If you're a dividend growth investor, you've likely heard of the Dividend Aristocrats. These are 66 companies that are listed on the S&P 500 and have increased their dividend for each of the past 25 years. And yes, the list is filled with stocks that, for the most part, you probably never heard of, and many of which they won't have those huge swings that we've seen in the stock market as of lately. But they do provide reliable dividend increases. In this video, I'm going to cover the top 10 yielding dividend aristocrats that investors are buying up today. That said, investors should never buy stocks based on the dividend alone. I mean, passive income is nice, but there's a lot of other things to consider as well. For instance, are earnings going up? What about debt? Is it too much? Or maybe not enough? And historically, how has the company performed during recessions? So it's important to research the fundamentals of these companies before making any decisions. And one of the tools that I use to research dividend stocks is SureDividend. SureDividend helps investors like you and me find high-quality income securities for their retirement and financial freedom portfolios. And the SureDividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. So if you'd like to check it out, go ahead and check the description because I've left a link for you for a free trial. And stay tuned because I'll also be giving you a promo code for a $41 discount off the newsletter. Alright, so without further ado, let's get started with my top 10 list of highest yielding dividend aristocrats today in order from the lowest yield to the highest. First on the list, we have Rowe Price. This is a company that was founded in 1937 by Thomas Rowe Price Jr. And today, the company is a global investment management organization headquartered in Baltimore, Maryland. The company has an impressive market cap of over $28 billion, and because of its assets, it's roughly correlated to the NASDAQ. As it's an investment management company, most of T. Rowe Price's assets are invested in the stock market. The company provides a broad array of mutual funds, sub-advisory services, and separate account management for individual and institutional investors, retirement plans, and financial intermediaries. Now, along with much of the broader stock market, especially tech stocks, so far 2022 has been difficult for T. Rowe Price. The stock started to slide in September of 2021 and made a brief comeback in November before resuming its slide again, much like the NASDAQ. That said, T. Rowe Price Group is committed to paying dividends and recently increased its dividend to $4.80 a year, representing an incredible 3.84% dividend yield on their common shares. Now, I say it's incredible because investors are going to have a hard time finding this sort of yield in other NASDAQ securities. Furthermore, thanks to the company's commitment to return value to its shareholders with solid cash generation capabilities, the company has raised its dividend for each of the last 36 years. Next on the list, we have Abbvie, a global research-based biopharmaceutical company that was formed in 2013 after the separation of Abbott Laboratories. The company's mission is to leverage its people, expertise, and unique approach to innovation to create and sell advanced therapies that address some of the world's most complex and severe diseases. Abbvie has a diversified portfolio of products, and the company's flagship product is Humira, which it's an FDA-approved drug that's good for treating several conditions, including Crohn's disease, ulcerative colitis, and rheumatoid arthritis. Abbvie also has several other products, including Caletra and Viterapac, that are also used to treat HIV. The company currently pays $5.64 a share in dividends annually, which represents a yield of 3.85%. Federal Realty is next on the list and is the only real estate investment trust, or REIT, that is both a dividend aristocrat as well as a dividend king. As a REIT, its business model is to own real estate properties and lease them to various retail tenants. Federal Realty concentrates in high-income, densely populated coastal markets in the United States, allowing it to charge more per square foot than its competition. On May 5th, Federal Realty reported first quarter earnings. The company generated funds from operations available to common shareholders of $1.50 per diluted share for the quarter, compared to $1.17 for the first quarter of last year. And most impressively, the company signed 119 leases for a total of 444,000 square feet of comparable space in the first quarter, their most active first quarter on record. And First Realty Investment Trust's current dividend yield is 3.87%. Next on the list, we have VF Corp. VF Corp is a clothing giant that started way back in 1899. You probably own clothing from this company. The company sells brands including Vans, The North Face, Timberland, Wrangler, and Lee. Also, the company offers occupational, protective occupational, athletic, and licensed apparel products under several different names, including MLB, NFL, and Harley-Davidson. It's no wonder VF Corp is one of the world's largest apparel, footwear, and accessories companies. VF Corporation is a dividend aristocrat, as it's an S&P 500 listed company and has increased its dividend for 49 years in a row. One more year and the company will make the coveted Dividend Kings list, a company that has increased their dividend for 50 years or more. Add to that, they have annual sales exceeding $11 billion and a market cap of over $19 billion US. And as of today, the company's shares have a dividend yield of 3.99%. Next, we have 3M, a diversified industrial conglomerate. 3M manufactures a massive number of products, over 60,000, that get used every single day in homes, hospitals, office buildings, and schools worldwide. Its business segments include safety and industrial, healthcare, transportation, and electronics, and consumer products. The last few years have been challenging for 3M. First, there was COVID-19. Now we've got inflation, and we also have the war in Ukraine. And the latest earnings released on April 26, 2022, also stated that 3M now expects its full year 2022 GAAP earnings per share to be in the range of $9.89 to $10.39 versus a prior expectation of $10.15 to $10.65. And full year 2022 adjusted earnings is expected to be in the range of $10.75 to $11.25 per share. That said, the company has durable competitive advantages that have allowed it to get through several rough periods. And if history repeats itself, today is really no different. 3M pays a quarterly dividend of $1.49 per common share, which works out to a 4.08% dividend yield. Next, we have Franklin Resources Incorporated, an American multinational holding company that specializes in asset management as well as investment services. The company was founded way back in 1947 as Franklin Distributors Incorporated, headquartered in San Mateo, California. Today, the company is known to its customers as Franklin Templeton Investments. Franklin Resources has a long history of success in the investment industry, and it manages a variety of assets for clients all over the world. For example, the company offers a wide range of products and services, including mutual funds, hedge funds, private equity, and fixed income. In addition, Franklin Templeton provides investment planning and portfolio management services. As of January 31st, 2022, the company has offices in over 30 countries, and after 75 years of investment expertise, they now manage over $1.5 trillion in assets. If you think that's a big amount of money, give me a thumbs up on this video. The company declared a quarterly cash dividend of 29 cents per share, payable on April 14th, 2022, to shareholders on record as of March 31st. Franklin Resources has a 5-year dividend growth rate of over 55%, and today their shares yield 4.33%. Next on the list, we have Realty Income Corporation, a company that was founded back in 1969. It's a retail-focused REIT that's famous for its monthly dividends. They even call themselves the Monthly Dividend Company. This means the company pays a dividend to its shareholders each and every month. It's kind of like collecting rent from a rental property, only you just need to own the stock. Today, the company has this highly scalable business model that has enabled it to grow its commercial portfolio to over 11,000 properties. Now, many retail landlords are facing challenges as folks shop online. That said, Realty Income is thriving because it owns retail properties that are suitable for a wide range of tenants, including government, healthcare, as well as entertainment from all over the United States as well as the United Kingdom. Today, Realty Income has a market cap of nearly $41 billion and pays a monthly dividend of 26.4 cents per share, representing a yield of 4.43% annually. And this yield is a tie for the next company on the list, Walgreens Boots Alliance. Walgreens Boots Alliance is a global pharmacy and healthcare company with operations in over 25 countries. It was founded in 1901 and has been a Dividend Aristocrat since 1972. Walgreens has increased its dividend for 47 consecutive years and currently yields 4.43%. Walgreens is a company that has been essential during the pandemic as it operates pharmacies as well as retail stores. It also offers health services through its healthcare clinics. The company has been able to maintain its dividend throughout the pandemic, and it's well positioned for the future. The company reported earnings on March 31st, 2022, and earnings per share came in at $1.02 for the quarter ending February 28th, 2022, which was 14.29% lower year over year. However, revenue increased by nearly 3% to $33.76 billion. Walgreens Boots Alliance is expected to perform well as it approaches its next earnings release, which is expected on June 30th, 2022. Today, it has a market cap of $37 billion and shares currently yield 4.43%. Next on the list, we have Leggett Platt, a diversified manufacturer of engineered components and products found in homes and automobiles. The company was founded way back in 1883 by brothers-in-law John W. Leggett and C.B. Platt. The company consists of 15 business units and 20,000 employee partners and 135 manufacturing facilities in 18 countries. That's a mouthful. Now, the company's products get shipped to more than 120 nations around the globe, and L&P's businesses can be broadly categorized into one of 4 segments: residential furnishings, commercial products, industrial materials, and specialized products. While each business unit has a unique profile and serves different end markets, they all share a commitment to delivering innovative, high-quality products that improve people's lives. Leggett & Platt moved from the S&P 500 to the S&P 400 Mid-Cap Index on December 3rd, 2021. This means it's technically not an aristocrat. However, on November 9th, 2021, the company increases its annual dividend by 5%, marking 50 consecutive years of increases. So I think it deserves a place on this list. Leggett & Platt currently pays a quarterly dividend of $1.76 per common share, representing a yield of 4.52%. And now, last on the list, we have IBM, a global technology giant that can trace its roots all the way back to 1911. Today, they provide cloud computing, artificial intelligence, and enterprise solutions. IBM has increased its dividend for 27 consecutive years, and it currently yields 4.62%. Now, IBM also took the brunt of COVID-19, but is on track for a rapid recovery. IBM's revenue for the last year, ending March 31st, 2022, was up 14.89% to $58.36 billion, while their quarterly revenues increased 7% versus the first quarter of last year. So it looks like they're on track to have another strong haul this time around. Looking forward, the company is starting to capitalize on growth in its cloud business, which is a high growth area in the tech industry. And while IBM is not the hottest company out there, given its history and size, it's an excellent option for dividend growth investors. And today, IBM is the highest yielding dividend aristocrat. Well, that's what I have for you today. Do you own any of the stocks that I mentioned here on this list? Or do you intend to buy some or sell them? Let me know in the comments below, because I love reading and collaborating with you all in the comments. In the meantime, thank you so much for watching, and I'll see you in another video.